for the CCI and the wave.
Has that actually been helping you?
Oh, that has just kept me. And the dashboard when it says choppy, I am learning to just shut up. Welcome next level. We're just getting started, and so you haven't really missed anything except some chatter.
Well, good.
Yep.
I was just going to say, and the reason I asked Jay is because, a lot of people, when they're utilizing something new, it's really about, just building your confidence in learning something new. And so oftentimes, people come here wanting to know a little bit more, and they're finding the new tools, but they're not really, using them. And I think, it's really hard to. I mean, I'm not here to convince anybody. We make available these items that we use, and if you want to use them, then great. If you don't, totally understand. But we certainly hope that you, give these new strategies, give these new tools an opportunity, so that you could see if this is something that could help you in your trading. So I wanted to talk to you today about trading gaps because, oftentimes I joke around about, is it a gap and go or is it a gap and crap? And a lot of people think I'm just joking around, but, there's actually meaning to all of this. And so, you sure that's big enough? You guys can see that? Can you read that,
Yeah,
Jay?
pretty good. Well, I have it
Mm.
on a big screen. I'm not sure about anyone else.
All right.
Guys, just put a one in the chat box if you can see it. Okay. And if you're late, in the upper right hand corner is a drop down chat box. So just if you have questions or comments, Sandy, uh, we're getting some ones. Yep, people can read it. Okay.
Okay, great. So,
All
what
right.
is a
Thank you.
gap? Well, in volatile markets, and we are definitely in a volatile market, traders can benefit from large jumps in asset prices. Now, oftentimes I'm telling you that if you're buying a call or a put, we really need a large jump in price, right? We need an aggressive, assertive thrust in the market. And that's exactly what a gap is. But what happens when you wake up in the morning? That gap is already there, and now you're apprehensive. And I know it because I've been there. So you're apprehensive about the gap. We've gapped up or we've gapped down, and you're really not knowing what to do next. But this could be really a good opportunity for a trader, especially an options trader. So gaps are areas on the chart where the price of the stock or the option moves sharply, either up or down, with little or no trading in between. And as a result, that option or that asset chart shows a gap in the normal price range. Now, oftentimes, those gaps, as we know them or understand them, happen in the middle of the night. And so sometimes you're just not aware that there's a gap or understand that there's a gap up or a gap down because you're just really not paying attention to the pre market activity. And so that's why we always take a look at the pre market levels to know. What is the pre market high and low? Where are we comparably to the close of yesterday? And so that's one of the pieces of the puzzle as a trader that you just kind of learn. You really don't understand why you're learning it until stuff like this happens. So as a result, that asset chart shows a gap in the normal price range. The enterprising, us, the traders, right, can interpret and exploit these gaps for profit. Okay, so we're going to go through a couple things. And so why is a gap happening? And it could be for many reasons. So notably right now, we're having an earnings season. So a lot of our gaps that are occurring right now, this week, this month, has been because of earnings. And as it says here, gaps happen mostly during these time periods. Now, there could be, some sort of deal that's happening with a company, a merger, an investigation or lawsuit that's occurring. Or, of course, what do we go through like literally just about every other month is FOMC. And those are the Fed actions that could lead to a gap in the stock. So, and of course, political events. Now, we dealt with already, which is kind of sad, these types of wars, and there are, commodities shortages, shipping and pipeline, uh, blockages. And so these types of events create those types of gaps in different types of stocks and commodities. Now, when we look at them in our charts, right, we kind of see something like this. I know this is my chart, and I have a gap finder on my chart. And so it's nice to be able to just wake up and not really have to really look at the pre-market levels the night before, but the gap just automatically shows up in a shaded area, and then I'm able to see, oh, we have a gap. So the first thing I'm thinking, is this going to be a gap and go or a gap and crap? And the reason I often type that and say that is because that gap, I mean, it's just really one of two strategies. It's either going to gap and go like it did here yesterday, gap and go, or it's going to, basically gap up, maybe do a gap fill, and or just go sideways the entire day, and that's what I call crappy. Because you really want to jump on the wave, right, if there's a gap and go. So what ends up happening is the gaps typically are not from retail traders, and again, 95 to 7% of traders out there are institutions. And so if the institutions are buying this overnight, or when the Asian market opens as an example, then we're going to see that gap. And then we have to determine if those institutions are going to be taking their money and running. And by the way, they don't just sell off like automatically, because they've bought in so much shares to gap the price up. When they sell the stock, they have to do it in bits. And so because they bought a lot in the middle of the night to gap it up, they typically try to, sell it off in lots. And that's to not to shake up the market too much, because they've already shaken up the market by gapping it up so much. And so now we need to determine, as traders, as human traders, not automated traders, right? We need to see, like, so is there, enough volume there to continue that run up? Or is this just a slow grind? Or are they going to just completely sell off now after they've made their money overnight? Now, there was a period in time last year I was just so upset. And I remember this vividly because I remember telling a trader friend of mine, I'm just sick that, every trading day we come into a gap up and then they're selling it off. And so we come in the next day thinking, oh, the ES is up and everything is up and all of our stock positions are up, etc. And then what the institutions did is they would immediately sell it off. And so all the good stuff was happening in the middle of the night if you were long, right? But if you had a strategy in your mind and you didn't have much of a bias, you could take advantage of that situation in both instances. And so we're going to talk about that a little bit more. So the first thing is volume. It's really important when you see a gap is to watch the volume carefully when determining if a gap is valid. If the stock gap up higher and the volume also is high, then price remains above the opening price. So now after the morning pullback, now remember, every morning I just about tell you when the mid-morning pullback is. So if there's a slight mid-morning reversal and the pullback is not aggressive, then it's an excellent sign that the stock has further momentum upside to go, and or downside, by the way. So this could work in both instances, right? Whether it be a gap down or a gap up, I'm referring to both sides of that coin just being an aggressive move. You're really looking at the volume of it all. And if the volume basically is still there, then you can actually then predict, oh, this is going to continue to the upside, even if it's going to be a grind up. Or, of course, if there isn't any volume, then it could reverse and trap you, of course. So if high volume appears after the gap up and the stock immediately comes under selling pressure, chances are this volume was a seller. Now, the reason they say that is because when they say a seller, they're meaning like a large institution, not like not like Sandy selling. You know, this is going to change the momentum of what's happening right now. I mean, it's like
This is
institution over institution. Yes,
so many times. This is the person that caused it to gap up to begin with, or
exactly.
institution. Yeah.
Exactly.
Okay.
And those institutions talk to each other, they know each other, you know.
Mm-hmm.
And so what ends up happening is, you know, so, but that institution not only is representing itself, right? It's also representing typically buyers and sellers as well because they're market makers.
Mm-hmm.
So if a large volume paper, you know, in a gap up, the situation, uh, and if the stock runs higher, then chances are that, of course, the buyers probably uh, the reason for the gap up is in okay. So basically, it's saying, of course, you know, if this continues to run, and it's really just talking about basic price action. I mean, you don't have to be super experienced to understand that if price continues to grind up, then more money is continuing into that asset in order for the stock price to continue higher. And that's all you really need to know. And then if you start to see selling, you just need to really identify your support and resistance levels to see if it's a normal reversal and or if it's going to continue to fill in that gap that it created. So our entry base basically are two types of gaps. It's the outside gap, the market open outside of the previous day's range. So yesterday you had a day's range of market activity and the gap is outside of that. And then you have an inside gap where the market opened inside of the previous day's range. So so it's you know if the market as an example, let me just try to explain that latter one because I know it sounds confusing, but if Apple traded between 130 and 135 and it closed at 135 and the next morning it traded at 130, that's what that means. So it gapped down the the for extended hours, but it only gapped down within its range of trading from yesterday. So I hope I clarified that correctly, or at least in a simple manner for you to understand. So the outside gap, the gap and go strategy. I love gap and goes. They're the easiest ones to participate in. So the price gaps up above the previous day's high. You wait for the first couple candles, which is usually, you know, 5 to 10 minutes. You have some sort of EMA or some other indicator on your chart. And then you can see that the volume should be high and supporting the direction of the gap. And you mark an opening range as if it was like the opening range breakout for like, let's just say the first 15 minutes. And then you enter on that breakout. And price, and I like how they use VWAP here. Price should stay above VWAP. That's interesting, and it's interesting to note in it. It reminds me as well that because oftentimes I don't use VWAP, and so this is actually a good indicator to put on your chart when we do have a gap to just make sure that if it's a gap and go that it is above VWAP. Okay, so the volume, let's talk about that. It's important to watch the volume carefully when determining if a gap is valid. If the stock gap up high and the volume also is high and the price remains above its opening price after the early morning pullback. Did I just go through this? I just did. Sorry about that, guys.
You did.
And of course, the gap and go strategy is the price gaps up above the previous day's high, wait for the first candle to complete, volume should be high and supporting in the direction of the gap, mark an opening range, just like an opening range breakout, and then enter on the breakout of the high of the day. Price should be above VWAP. Okay, so what's that look like? So this is a chart that is identifying, okay, look, here we've gapped down, and here's the high volume for that candle. And then it's going to consolidate as soon as, all the orders get filled. And then there's going to be like a pause because people are going to be like, oh, wait a minute, is this going to be a gap and go or a gap and crap? Everybody's wanting to know the same thing. Go ahead.
No, I wouldn't say
Oh,
anything.
and so what ends up happening is there's going to be this like pause because everybody's going to be wanting to know, is this going to continue or not? And so as that's consolidating, then, as it's consolidating, that it's either going to go up in reverse, or it's going to continue to gap down. And so that is when you basically identify, okay, look, I'm going to, create a stop here. I'm going to create my entry here, and I'm going to enter. And I have a small risk versus the reward if this continues to gap down. And then you jump in. And then in doing so, you could take advantage of that gap and go. That's exactly what a gap and go is. And what
So
is
gap and go in any direction?
Yes. So in this example, it's going down, right? You wake up, the market's gap down. You can see the gap, and then you identify, if you're trading a 5-minute candle or 15-minute candle, you've identified your candle, and it's a nice engulfing candle, which means, that's institution selling. You identify that candle and you say, boom. If it goes above this candle, then I'm stopped out, but I'm going to get into this. And there's always a period of consolidation because everyone's wondering the same thing that you are wondering. Is this a gap and go or a gap and crap? And so if you end up doing that, you really limit your risk, and you certainly enhance your reward by getting involved in these types of trades. So
Does it matter anything to do with the time frame of the chart? I mean, you still use look at your 15-minute to confirm that you're on track with the 5.
Yeah, and oftentimes that continuation move is going to happen after an hour. So I know that seems like a really long time, but usually after let's say your initial 15 minutes, then you're going to actually, after an hour happens, you're going to start taking a look at that candle formation and then see where your support and resistance lies on an hourly chart to see if that's going to continue throughout the day or if it's going to start to reverse.
Okay.
So now we're going to take a look at the gap and crap is what I call it. And it's basically like, okay, you gap down and everybody's like, okay, what's going to happen next? And there's this consolidation phase, which is, basically just choppy. And then it just kind of hangs around your indicator, whether it be VWAP, it might be, RSI, it could be our wave indicator, but it's just going to stay in a choppy range and not allow you to do anything. And that is what I consider kind of a crap, is like, oh, we had an opportunity, but it just kind of, nothing really amounted to it. And that's because the institutions really didn't get involved. Whatever happened overnight happened, and then they didn't want to continue that business. And so because of that, nothing really resulted from it.
So hypothetical, then it's possible that an institution was placing a big order or selling a big order, and there was nobody on the other end. And if they placed a big order, they were doing it for a client, say, and they bought 200,000 shares of XYZ for a fund, then that can cause it to stay in one place like this.
That could, depending on how big the order was, it could create the gap down. or the news
Uh-huh.
could have created the gap down. But it but after that gap down occurred, nothing took place because no other institutions got involved. No other big
Okay.
sellers in this example got involved. And
Okay.
no
So it,
buyers, and no buyers got involved to do a reversal on this.
yeah. So Freedom says I don't see where the gap is on the gap and cleft.
The gap is up here.
Ah, got it. Okay.
So you wake up the next morning and it's gapped all the way down. So here's the gap up here. There's no candle up here.
Yeah. And Pamela says is that first candle the opening range?
Yeah, exactly. That's the first candle that you see in the morning that's like, holy moly, what's going on? And you think it's going to continue when you see a candle like that. But instead, what's it
Right.
do? It just chops around.
Right.
Okay. So then we have basically the reversal or the low volume reversal. And this really is a just, when we talk about volume, we talk about conviction, right? And so what ends up happening is if you are using some sort of volume profile, you'll be able to identify, as an example, the large volume that created that gap down and created the actual move that's continuing to go. And then what ends up happening is then all of a sudden you start seeing green volume bars, and you think, oh, there's going to be a reversal and it's going to fill the gap because a lot of people really, understand that a lot of gaps, when they happen, they get filled. It doesn't necessarily mean, though, that they get filled that day. They could get filled weeks later, after they've had this, in this example, looking at this chart, after we've already like ran down so many hundreds of points. Then it could run up and then fill that gap at some point. So the gap is going to be filled. Sometimes it's partially filled, sometimes it's fully filled. It's going to get filled one way or another, but it doesn't necessarily mean it's going to be filled in the same day. So in this example, they're just showing you how volume now is, uh, you see a reversal, you start seeing the green candles, and it starts going in the opposite direction, but it's not strong enough. And I know we've seen that like so many times where our indicators are changing and the candles are turning, the opposite color, but it's just not strong enough to do anything because it takes so much money to turn the bus around. And so this would be like one of those instances where we gap down, a lot of money went out of the market or out of this certain stock, and then all of a sudden somebody says, oh, this might be a good, this looks like the low, I'm going to buy into this, as an example. So the institution gets into it, and it's trying to turn the bus around, but it's just not enough money. And if you don't have the herd mentality following you, all the institutions following you, then this is what happens. It just fizzles out and then starts to reverse. And if you can identify that, then you can see, oh, you know what? This looked like a reversal. It looked like it may have wanted to go fill the gap, but actually it doesn't have enough strength and it's going to be a continuation. So if you had profit here as an example and you got out on this candle, you could have waited till you saw the pin form and say, oh, you know what, there's not enough oomph in the market. It's not a full-fledged reversal. I'm going to get back in on the short and then take that the rest of the day. You with that knowledge, knowing, as well as identifying, right? And you could have your VWAP up here or any other indicator that you were using to identify the trend was still continuing lower, and that's how you would use that. So I guess what's the point? Well, when there is a gap, it's not an every, it seems like more of an everyday activity these days. But really, this is a strategy that you can utilize to make some money. And knowing that you need to just pay attention because a catalyst was involved, it created this movement, and now you're just wanting to be on guard to say, okay, How can I capitalize from this? And where should I put my stop and jump into this so that I can, hopefully get in, make some profit, and get out? And so if you're more aware that gaps are very profitable to traders, if you can react quickly to them and make a decision, because oftentimes as a new trader, you see a gap, you see the gap down and you don't believe it. You're like, I don't know. I don't think this is going to reverse. I'm sure everyone said that today. This is not going to reverse today. And what a great reversal that was. But if you can at least identify when the point is of a possible reversal, and then identify if it was enough money to turn the bus around to get into that reversal, then you're going to be able to make some money. But if you just sit there and watch it and do nothing and don't think about, plan A or plan B, then you're just going to unfortunately waste this opportunity. So that's really, I think the thought process of when I see a gap. And that's why I'm always like trying to identify it. Hey, like already get it in your mind. Is this a gap and go or a gap and crap? Is this an opportunity for us or is it not? And hopefully try to jump on that. So
And do you look for news and just I mean with ThinkorSwim, got the
I
little
do. I do.
news thing. Okay.
I utilize ThinkorSwim, the business, what is that, CNBC Business or whatever, just
Okay.
to scan the news real quick. I used to have
Right.
a noise on, like the news in the background, but I don't anymore. I'm just, I like it quiet and I'd rather just read it to see what's going on. But really, it's just important for you to, oh, there's a gap. Where's the gap? Because that gap is going to act as what? Well, if the gap is above you, it could act as resistance until you start breaking through that gap. If you know that sometimes, a gap doesn't fill all at once, sometimes it's just 50%. But just knowing that, then you're just better prepared to take advantage of whatever that situation is. If you have no knowledge whatsoever and you don't know anything about it, then you might just unfortunately just be on the wrong side of the tracks each and every time you get in and out, just because you're just not paying attention to your surroundings at the time. So you're going to identify the gap, you're going to check the volume in the market to see if there's continuation. We're really wanting to know, is this bus going to keep barreling down the highway or is it going to actually turn around? Today, was a good example, and I'm not really, I'm thinking to myself, was there a gap this morning? I can't remember now, but I remember during the reversal, though, I was thinking to myself, it had consolidated for quite a while. So we didn't have like the immediate reversal at 7:15. And as a matter of fact, it kind of consolidated around my time at 7, sorry, 7:15, 10:15 Eastern Standard Time. But typically we see an automatic reversal very quickly around the 10:15 time. And I noticed that like right at like 10 o'clock, all of a sudden it was chopping. And I thought that that was interesting only because it was a longer consolidation period. And when it finally did turn, which was later, not at 10:15, but at 10:30, that's when I identified, oh, it's mid-morning reversal now. This could be something. And it was something. It was a complete reversal.
Hmm.
Um, I don't think I knew it, though I was in two trades and took advantage of it. But I clearly was kind of in tune with, oh, that's interesting. We're consolidating earlier than we typically are. Um, Instead of a quick little reversal, we're again consolidating for almost a half an hour, which was an extended period of time for mid-morning reversals. And when it did finally turn the bus around, it made a full-on trend change. So in a weird way, if you can just identify these little things and then take a trade, you can make some decent money off of it.
But do
Um,
you look at things after hours as well? I mean, like today, Apple after hours really did a spike.
I did take a look at it, but I'll take a better look at it in the morning to see if it had follow through or if it fizzles out. I guess that's
Mm-hmm.
the name of the game, right? Because you have
Right.
all of after hours to see if the ES follows through, and Apple is a market mover stock. So
Mm-hmm.
this definitely, uh, is important to the overall market. This moves the market, you know.
Right.
So um, if it ends up not, being all that strong tomorrow, that'll be interesting to see. But we'll see. We'll see. I never. I guess I don't like really. I try not to have a bias anymore, especially in a downtrending market. And the reason is because the whipsaws are so aggressive that
Mm-hmm.
if you do have a bias, you're going to just be smacked in the face. And I'd rather be in and out with profit, and my swings are short, they're only a day or two. This is very different from an uptrending market where you're in a trade for a week or two. this is this
Yeah.
is a very peculiar time. This is not what I'm accustomed to at all. But I'm just kind of um, assimilating to my environment, so to speak.
Well, it helps me with my paranoia because I'm definitely not holding things until anymore.
Yeah, because we're all hoping, right? We're all hoping. Oh,
Right.
just like right now, we have a higher high. Um, we feel, a lot of people feel in the market that our chart analysis says that, this could have been a bottom now, and automatically, I'm thinking that people are thinking, oh, then we're going to kind of go straight up, and I just don't feel like there's a straight up anymore. Not where we're sitting
Oh,
right now. I feel like there's going to be a lot of crazy, volatile moments, and the coast isn't clear. And there's, regardless of what the chart analysis says and price action right now, you know, our situation as it is right now with, talks of a possible recession and GDP slowing down and the war that's going on, like nothing of that has changed yet. And so I think until we actually see those numbers actually truly change, then I think we can start to take a more longer term approach, I think, to our options trading. But right now, for
right.
me anyway, I'm a little bit more shorter dated than I typically
Yeah.
am ever.
There's a lot of information. And Freedom was saying, I was wondering how you knew it was going to reverse. So now I know the bits of information to look for.
Yes, and I really do believe that, these are all the little things I think that, when you first get into the market, you really don't even, no one, when I learned all my information, which was an extensive 1 year training course, no one told me about the mid morning reversal. Like I learned that on my own. And you figure it out eventually. And um, as well as when people are talking about it, and so when you know that, then it just makes you a better trader. But again, all these little bits and pieces in trading, uh, is there's so many, and what's going to stick to you, or what sticks to me is going to be very subjective and different. But I think as we continue on our path of learning and educating and training, I think that every time I say it or I type it in the box, if I'm not on live, every time you read it, I'm hoping that, oh, one day you're just going to automatically look at the clock and go, oh, guess what? It's 10:15. I know exactly what this is. I'm up
Yeah.
70% right now. Should I get out now, or should I wait till my indicator does this? Or should I wait till my other indicator says this? No, you should
You,
already
you,
know. Like, get out as quickly, get out now, because keep as much of it as you can. You can
you
always
timed that
get
just
back in
right.
later.
You, you timed that just right because Pamela says, can you repeat what time is normal mid-market reversal?
Yes. It so it's typically around I wanted just to say 10:15, 10:30. This morning it started, the consolidation started at 10, is which I noticed was a little early. So that's when the first aha was. So it's typically around 10:15, almost on the dot. Between 10:15 and 10:30 is the reversal time.
So Freedom says set an alert, and I have Alexa in every room, so I can just start telling Alexa to tell me.
That's right. As a matter of fact, back in the day, I used to, put a stick note on my computer, as well as just set my phone alarm to it, so that an alarm would go off at around 10 o'clock, so I would be aware of it, so that if I had good profit. As an example, this morning I was in. No, I think that was after the fact. I was in BA. Was it? No, was that B? I don't know if I took.
I didn't get BA today.
Oh, I don't know if I took Boeing beforehand, but I remember saying, "Hey, I'm going to, set a trail stop because I'm not going to lose my profits." And I think that may have been before the reversal, but I'm not quite sure. I'm not positive. But if you can in your mind already know that that's coming up, and then just say, well, just in case she's wrong, as an example, I'm going to set a trail stop for 8% or 10%. At least you know that you're going to get out with profit if you've made 20, 30, 40, 50, and in my case, 60%, right? So by doing that, what you do is that you just limit all the human emotions that go into maybe it's going to happen, maybe it's not going to happen. Maybe this is going to continue. Maybe it's not going to continue.
Well,
and you just take your
that's a good
profit
point.
and say, okay, I think I'm going to be happy with, 60% or whatever you got out of it.
And Buddy Guy said just a minute ago, the hardest part of trading is not to have a bias.
Right? I know. I'm getting better and better. I'm actually, it is, and I think I have to. I work at it every day. As a matter of fact, I work at it every day. I wake up and I look at the futures and I go, oh, I kind of feel like, oh, already it's starting and my bias is starting, and I go, you know what? Let's just see how today opens. I think that's my joke. Let's see what today brings. Let's see what tomorrow brings. And I think I'm a better trader overall just because of that. It's like, hey, wait, let's just, if we follow the steps, right, whether it be your Apple stock or the ES for the overall market, right, if you just follow the direction of it, you don't have to know all the candlesticks and know, everything about everything. If you just follow the price and know what your support and resistance is, then you can see what the next stair is. Is it in front of you or is it behind you? And then start leaning that way.
Hamlet says, I've ruined so many trades by having a bias.
Yeah.
I just need to be a robot and watch the charts.
That's it. Yeah, not even the charts, just
eventually, we're going to have this thing automated anyhow, right?
Oh, God. So I don't know if anybody noticed, but today I sent out, only because I had the time, I sent out, a text and I put it in our box. I try to put it when the ES breaks. But you notice that as soon as I said, oh, the ES just broke resistance, that we started to grind up ever so slowly higher. And I even said, this is terrible chopping. This is slow motion trading right here. It's going to just chop you up if you try to get into an intraday trade and set up, as an example, a stop loss at like 15%. It's going to stop you out. And a better trade would have been a butterfly, or as an example, a bullish butterfly or a bullish credit spread. You could have stayed in that thing forever and made money. And because they're so cheap, you could have got a couple of them instead of just one, as an example, if you were to get a call or a put. So I'm hoping that, as I just keep repeating myself and I just keep talking about these topics, that little bits and pieces of the puzzle will start coming to you. And before you know it, I try to talk about the things that really impacted my trading. And because I think I'm just, the girl next door, just like everybody else. And the way that I learned is probably a lot similar to the way that you're learning. And so I really hope that it helps you, the bits and pieces. And if it doesn't, and you have some suggestions on how we could improve our training and education, please let us know. I'm really hoping that, because like Chris, as an example, has a background in advanced strategies of calendars and more advanced butterflies, that because of his availability, you guys that are interested in that will be able to ask him those questions. And then for somebody that's interested in futures, Nate's going to be here to answer those questions and to get you started in that direction if you wanted to head down that path. And then, Richie's coming back. He took care of his family, issues, and he's going to have a channel as well to answer questions about the wheel strategy, so that if you're interested as a retiree to own stock and sell covered calls on your stock to create or generate an income from that, then he'll be there as a resource. And then you, as you know me, will be here talking about my bits and pieces that I've learned to help you along your way as well. So hopefully with all these different steps in the career of trading, that we'll just keep adding to the expertise and knowledge. And by you guys letting us know how we're doing, we'll just hopefully just keep improving.
Before we move too far away, phone 0909 just asked, can you tell me which videos are about the automation? I know Alicia's been looking at some.
Sure. So is this person a subscriber or in the free membership?
He is, yeah.
Okay. As a subscriber, you just go right over to the Start Strategy area, and from there, we have two links. One is the Start Strategy, the other is Automation. And that will take you to my website with a list of videos that will get you right to where you want to be. As well, by the way, in that same channel is a new member orientation. So if you're new to our Discord as a subscriber, please go there. And I introduce each and every single of the channels to you and how they can help you in your trading. So the only other thing I wanted to talk to you about in regards to gaps before I finish this up, because I know there was a lot of personal stuff. When we look at, so we're checking the volume in the market, is the smart money there, right? That's what we're looking at. So we have tools in our Discord that allow you to take a look at smart money to see the money flow, trading ticks, right? So you could do a TR net flow, whether it be Apple or wherever, to see if you have some large money getting in while you're analyzing the gap. The other thing too is you're going to be careful of the reversals to the gap fill, and we know that. So if you get stuck or trapped because you didn't set an alert or a stop loss, and you get stuck in a gap fill and you're losing your profits, just know that usually after the gap fill, it's going to reverse and then go back to the direction that it was. So oftentimes when the market opens up and we're in a gap situation, people want to get out of their positions like so quickly. And I have to tell you that if you get out of your position quickly, right when the gap, the market opens up, you are going to be losing so much more money than if you just waited just a little bit, wait the 10 or 15 minutes. You'll be surprised because the volatility is going to crush, it's going to calm down. And when the volatility calms down, then the pricing of whatever position that you're in is going to recover more. So even if you're going in the opposite direction, you got it wrong. As an example, we were in Home Depot. We gapped down yesterday. Was it today? Yesterday, we gapped down. We opened up, and it's like, oh, wait a minute. Okay. So the first 15 minutes is like, okay, now, if you need to get out of this position, get out. But if you're in a credit spread, or excuse me, a debit spread, you could wait this thing out. And believe it or not, before the day was done, Home Depot recovered. And if you were in a credit spread, you got out for just about what you got in for. And you can, and by the way, if you had the call, you would have only been down a total of 20% instead of 50%. So what a difference, right? So as we're having these volatile markets, just remember, don't panic if it goes against you, especially when it first opens. Take a deep breath and know that there's always a better exit point, and you just need to just think about that for a moment. Instead of getting out with a negative 50, you could get out with a negative 20 or get out at break even or even actually make some money. Believe it or not, it happens all the time. Yesterday was a great example of it. And then look, so now you're in a gap, you've identified a gap, and you're like, oh, I'm not really sure about the volume. I'm not really sure about if this is a continuation or not. It's so damn choppy. Like today, I was like, oh my gosh, I hate these types of days where price action is like watching paint dry, but it is grinding up. It's like, ugh. So what you do is you start looking on different time frames. So you're looking, I bet, on the shorter time frames because that's what we can afford. But then you start looking at the 15 and the 30 and the 1 hour and the 1 day. And if you can actually start seeing um, price breaking through support or resistance on the lower time frames as it's moving up, then it's just confirmation for you that yes, we are even though it looks so choppy to you, we are moving in the right direction. It's breaking support and resistance on the other time frames, and it's just going to take a while. And hopefully, maybe you're in a different strategy than a long call or a long put, but if you are, you just have to wait it out and try to close your eyes and not set a stop on it, or it'll stop you out on these types of days, unfortunately.
Right. Well, Sandy, thanks so much. We got about 2 minutes left. If you could give us a 2 or 3 minute idea about the master class on Sunday afternoon. We have some new people on tonight, so
Well, we only
give
have a
us just
we only have a couple spots available. I mean, it actually filled up pretty quickly, and we are having a master class. I was surprised to see how popular that this is, and really, it's just really about like why we're here, right? The basics of getting your chart set up. Is your chart comfortable with the indicators that you want on it? That is simple for you to read, so that you can make a better decision while you're trading. And then how do you get those indicators that you want? How do you read the indicators? And then really what's all about our trading strategy. So our trading strategy does, basically revolve around looking at volume of the smart money as well as the indicator that we've provided to help traders look at trends, stay in a trend a lot longer than you normally would, as well as get out a lot quicker than you normally would if you were hoping and wondering about if you should or not. And then we're also going to be talking about, and this is your next step as a trader, is really support and resistance trading. Now I know, a lot of people hate buying at support because it's an awful feeling. You're buying at today's low, as an example. Who wants to do that? We would rather, as new traders, trade by buying when we break out. But actually, support and resistance is probably the best way to trade. It limits the amount of risk that you put up front, and you capitalize on your reward because you're buying at the lowest level. And the only way that you can do that is by setting a stop. And we're going to go through all about analyzing support and resistance, as well as how to make those trades, where to put your stop, and you know, just the simplicity of your basic foundation of trading. I think those things in the beginning as a trader are probably the most important to you. Because if you're not comfortable with the tools that you have on your belt, then you're not going to be able to know where they're at. You're not going to know how to use them. And that's what that 2 hour class is about. It's Sunday from 1 to 3 p.m. Eastern Standard Time. And we'll have a PDF workbook as well as a video on it so that you can refer to it whenever you want to. And then it's 2 hours. It'd probably be more than 2 hours because I was going to actually.
It's always going to be more.
It always is more than 2 hours with me. If anybody's ever taken a one-on-one with me, I'm not a clock watcher, and I'm very detail oriented, and I want to make sure that you have the information that you need to make better decisions in the future, and I don't want you to think we're going to rush through it. So It'll
Oh,
probably end up being a little longer, but go
Chai
ahead.
is asking, is this only for paid members or can anybody?
It is right now, but maybe that's something in the future that I do is have that for uh, non-subscribers. Um, in our subscription service, we do live trading and training literally 3 times a week. And so, because we're together and we're learning a lot of stuff, our subscribers are going to probably be a lot further into their trading than the non-subscribers. And so maybe I need to set some time to talk with non-subscribers to see where you're at in your trading to create a lesson plan specifically for non-subscribers. But I think for all the subscribers that have been with us, you get a real sense of what we're doing, the tools that we use, and how do we look at charts and how we make trades since you're here every day.
And in Trade Monkey, I don't know if we have time or not. Can you show some gap examples in the chart for the last few days? Example like Microsoft yesterday.
Yeah, let's do that.
And then Alicia says, will we use our paid subscriber indicators on Sunday?
Yes, absolutely.
No.
So when we look at Microsoft as an example, you could see, let me change my screen here for you. So this is a great example. This is a gap finder indicator for the subscribers in your channel. You can find that for you so that you could just put that on your charts, and anytime you go to a chart, you'll be able to find where your gaps are. And so like here is a gap that you can easily find. And so same thing on SPY as an example. SPY's got plenty of them, SPX. There we go. I'm just on a 15-minute chart as an example, but you could see the gaps. And so those are important for us to identify. Like, as an example, this gap right here, we gapped up. And so we have this gap here, and eventually that gap will be filled. And you're probably thinking, well, when in the hell are we going to get down to 39.75 and lower, or 39.52 and lower? And I'm telling you that at some point we will, and we will fill that gap. So just FYI, if you're thinking, our downtrend is now over, I don't think so. So in any event, these gaps usually get filled, and we'll see when they do. But knowing it though, right, just better prepares you so that you are not so biased thinking, that's it, the downtrend's over, we're all good to go, let's throw our money right back into the market and do what we want to do. You're laughing. Why are you laughing? There might be, look at all these gaps, and eventually they do get filled.
From it way past, well, maybe when you were a small child, there was a song, this is what goes up must come down. Yeah. Spinning wheel has to go
what goes up must come down. That's right. I'm old enough to know that. So you could see on this gap finder, I'm on a 1 hour here, just really zooming out, but you could see a couple Sundays ago, and then it got filled, and then this one got, then we had a gap up here, and that didn't get filled. This one didn't get filled. This is on the Qs. Here's a gap, here's a gap. So the nice thing is if you put the gap finder on, right, then you'll be able, if you wake up one day and you're like, holy moly, like, why is the market going down? Like, what's the deal? What level are we testing? If you have the gap finder on, you can go, oh, I think we might be heading towards that gap. So again, a tool that helps you, just make better decisions about what might be happening in the market and how you can react to it and make money from it, and or save money, right?
That's it. Thank you, Sandy. Thank you all for joining tonight, and we'll see some of you in the chat room tomorrow, the end of the week, and we'll see what happens with Amazon and Apple and their gaps up. Hopefully it's a gap up tomorrow.
Well, thank you everybody for coming. I really do appreciate it, and we'll see you tomorrow.
All right. Good night.